Good morning. Today is Tuesday, August the 1st, and this is the first trading day for the new month of August. The time right now in Singapore is 11:40 in the morning. We are only 20 minutes to noon. And let's take a look at what happened overnight. And we can see that the equity markets remains basically sidelined, waiting for this week's key numbers as far as the non-farm payroll is concerned. So we do have to watch out for those numbers. In the meantime, the market is just basically treading water. And right now in the Dow Jones itself, we can see the market is basically within a bracket of prices which are deemed to be very vulnerable to the downside. And that level in the Dow Jones is 35,232.8 to 35,824.3. So the highest traded so far last week was 35,645.35. Now this put it in a position which I think the odds for a pullback is actually quite great, and from a risk reward perspective, this actually offers us a very low risk, high rewards trade setup to the downside. So if you are also keen to take this trade, this current price is actually quite conducive. Immediate target is about 33,610 with an alternate targets at 32,590. So you can see this is the cash index, and if we reference the futures contract, now this is the micro E-mini Dow itself traded in the CME. We can see that this one offers us a very clear-cut sense of where the market is. We have a high of 35,844 in the futures contract. We have a drop down to 35,350 before we bounce up to currently about just under 35,700. And if the market can go up just by a wee bit more to 35,738 to 35,844, this actually presents a very fantastic risk reward setup here to the downside. Like I said, the immediate payout, my target is at least for the drop to 34,500 with a possible deeper correction down to 33,850. So this is quite a significant drop. So I do expect it to pull back ideally in a corrective manner, and we have to see how this thing pans out. Okay, over in the S&P 500, we also have something very similar in the cash index. We can see that the prices traded to a high of 4,607, and this currently market is in the of course, this is referring to the cash index. The market right now is in the bracket of prices, which again, I think is quite vulnerable to the downside. The bracket itself is 4,549 to 4,637.3. And immediate target is 4,385 with another alternate target at 4,328. Of course, I'm not going to look at these 4,000 levels just yet. I just want to look at these two levels and see how the market performs if it pulls back. Now, in the micro E-mini S&P 500, the market is already in a bracket where I think it is great to sell already. The 4,617 and a quarter, 4,634 and a half currently is where the market is right now. So I do expect a reaction to the downside with immediate target at 4,528 with another target at 4,411. So again, these are guidelines. I'm not saying the market is going to go all the way there, but just saying that these are potential guidelines so that you can measure your risk reward payout so that you can actually have a sense of measurement as to whether it is worth a while to trade counter trend. Now in the Nasdaq 100, we also have something quite similar. We have the cash index at 15,932 and the market currently is trading at 15,757. Okay, so this is just a wee bit just below the target price, in which I think is going to be great for selling, 15,812 to 15,932. So I think this area just need a little bit of push into this bracket, and then immediate target is at 15,100 thereabout. Now in the futures equivalent, this is the micro E-mini Nasdaq 100. We need a little bit of push into the 15,941 and a half to 16,062 and a half. This bracket will be quite ideal. Immediate target is at 15,064. Another target is at 14,853 and a half. So again, do this, use this as a kind of reference point to see whether it makes sense for you to actually take a counter trend trade. Now over in Asia, we can see that this morning, or rather overnight, we have the Hang Seng going above 20,000, and this is the best we have done for 2 months. Okay, we have a rebound from 18,000 levels to go to 20,036 overnight, and the market just needed a little bit push into 20,000 390 levels to actually give me a good idea to see if we can sell. But actually, for all intended purposes, if we're not going to split hair, I think this area is as good enough for me to take a counter trend trade, because overall this morning we have the Kaising manufacturing PMI, which came in lower than expected. Market was expecting a reading of 50.3, it came in 49.2. Now this is bad because we already knew that the manufacturing is not doing well, and this is just further confirmation. It is definitely in contraction zone. So definitely we see even the official numbers coming out from the government agency, the PMI for manufacturing is already dropping. So this is the third month in a row in which this number has fallen. So definitely this is showing weakness in the Chinese manufacturing sector itself. So if you base this on the idea that the market has rebounded so much, the whole idea, the reason why the market rebounds so much in both the Hang Seng Index and the Shanghai Composite Index, or for that matter, all Chinese equity index, we can see that the market is basically hoping that the central government will come in to save the day by introducing some kind of stimulus package. But today we have not seen anything of that sort. So the market is just hanging on for hope. And this is definitely not something you want to depend your decision on. Okay, so basically right now, I think the market is quite right now for the market to pull back down to go back and retest the 18,000 levels. Okay, so this is just my opinion. So in the Shanghai Composite Index, we can see that the market actually rebounded yesterday, 3,322, and closes with a major reversal pattern here. This morning we have a bit of a bounce, but a bounce only managed to recover 50% of yesterday's this entire drop from 3,322. So again, this market is ripe for a retest of the low at 3,144. So again, I am quite bearish on this Chinese equity as well. So do watch out for further declines in this market. Now over in the Japanese market, we can see that the Nikkei 225 is managed to go up a little bit higher this morning, but not much more. I would think the upside is quite limited. I am actually looking for a sell somewhere in the 33,760 to 33,950 levels. So I want to see how this thing will struggle to the upside, because again, the overbearing decision why I want to go short this market is basically the Bank of Japan has already told us that they are going to tweak the ultra loose monetary policy. I think this will be a major game changer, although the markets do not believe that they will change it anytime soon. Definitely it did not happen in July, but again, the Bank of Japan do not make a statement unless it has the intention of doing so. So maybe it will happen in August, because this will be a game changer in a big way. Just remember, the Bank of Japan has not changed its ultra loose monetary policy since 2016. So now that we are hearing it, it's obviously on the idea that the inflation has taken root in Japan, and it's time to relax the ultra loose monetary policy, because they are losing trillions of dollars outflow into the Western economies because of the interest rate differential. So I believe once the markets, once the Bank of Japan decided to actually act on that, to allow the interest rate to rise a little bit, it's going to cause a backflow of all this capital from outside back into Japan, and this is definitely going to cause the yen to appreciate. And when that happens, what has actually gone up may actually come back down in equity markets. Okay, so do watch out for that as well. In the dollar index, we see that the dollar is continuing to charge higher. I do not believe there's going to be any much more room left. We have a high of 101.83, and the market may actually challenge this pivot high at 102.20, perhaps even going as high as 102.5 to even 103. But I think that will be the top side. I think the market is getting ready for a pullback, because this three-wave rally from 99.22, I will believe is corrective in nature, and by the time it finishes this corrective rebound, I think the market is getting ready to come back down, because the original trend, the dominant trend, is basically down. And over in the euro dollar, we can see the euro dollar has already pulled back a little bit from the overnight high. And if we do get another bounce back to 110.70 to 110.85, that will be one bracket of prices that will put it very vulnerable to the downside. I do not believe this drop in the euro dollar is by any means over. If you have not already sold at 111.50, then the next level to actually do so is 110.70 to 110.84, and the market target is at least 109. Okay, do watch out for the market to test the 109 levels. In the sterling itself, very similar. I do expect this rebound from 127.60 all the way back to 129. 10 to 129.40. That will offer us a three-wave rebound. And again, if you have not already sold at 129.70, you'll want to do so at 129.10 thereabout. Target remains at 126.75. And over in the Aussie right now is looking to come off as we are speaking. So this market right now is already on the way down because this larger degree three wave is still unfolding. I would expect this market to eventually hit the 66 cents eventually, but this is where we are right now. Can you sell now? It's a bit of a 50-50 right now. If you want to sell, perhaps wait for a small shallow rebound, at least cover back 50% of this move. That would be actually quite ideal. Now, if you dare to do so, that would be great because at 0.6715, that will be a much better level to actually do so. But if it doesn't rebound, then that's it. You're going to miss the boat altogether. Over in dollar yen, we can see that dollar yen remains very strong, and right now it is already in equality rebound from 137.25 all the way to 142.80 this morning, and this is exactly the area which I think will put it very vulnerable for the continuation of this down move which you have seen from 145.07. So again, this is just I believe a technical rebound, and the market is right for a extension of this decline from 145, and my target is for the time being at least at 132.40. okay. Over in dollar Canadian, we can see that dollar CAD is probably going to struggle a bit higher. We have a bit of a sideways move, but I think the market is probably going to gun for 132.70 to as high as 133.10, and this will be a level to sell because I do believe this drop from 133.87 is still unfolding, and eventually a drop below 131 is going to be seen again, and my target is definitely somewhere between 130. okay, so at least at the bare minimum 130 will be my target for this move. And in the crude oil itself, crude oil has managed to edge even higher. This is a little bit of a dilemma because I do not believe this market has much of an upside here, although it has been proving me wrong over the last week or so. There is a pivot point here to watch out for, which is $83.34. So this is basis the futures contract. So if the market do test the $83.34 thereabout, even if it penetrate and we cannot sustain and close back down, especially with a reversal signal, I think that's my cue to go back into sell. My target is $73.84. However, if you do not want to sell, then wait for the market to drift lower and then engage the market on the long side somewhere around $73.84. Over in gold, we can see that gold market is edging, is struggling to go higher. So I do believe gold is getting ready to surge. Okay, so far we have a three-wave rally, and if the market can stay somewhere where it is currently, 1,962 levels, I think the market looks getting ready to actually surge beyond the $2,000 level. My immediate target is probably around $2,037. This may be a little bit too far-fetched. Let's say, for example, you don't think this level is achievable, then what we can do is to do something a little bit less aggressive. Maybe I can put it at this level. Hang on. Okay, maybe this will be something more achievable than the we can't move this. Okay, good. So maybe as little as $2,000. So anywhere between $2,000 to $2,037 is where my target is. So do watch out for this eventuality. I think 2,000 is quite achievable in my opinion. $2,058 is quite achievable. Okay, so if you have a view to buy, then I think from here where we are right now, we are looking at least, if not $40, it will at least $35 per ounce. So it's actually quite a great trade if you want to do this trade. Over in the silver, we're also looking at something very similar. If the market can pull back around $24.43 or 45 cents, do this trade, I think the market will take out $25.27 towards the $25 or even $26. So I think this market is quite achievable. Okay. Over in the Bitcoin itself, Bitcoin has a bit of a drop this morning, which is quite ideal because I was hoping for the market to at least drop one final time into the 28,300 to 28,740 levels for me to pick up some long position. So let's see if the market can drop a little bit more, and it all depends on the way it drops. If it's a very sharp drop and then it punches through below 28,000, then maybe we have to reassess. But if the market goes into this bracket of prices between 28,300 to 28,740, and if it slows down and gives us a buy signal, then I think that is worth taking. Okay, this is just my view. You can actually take a watch and monitor from here onwards. In the meantime, that's all I have for you for today. I'll come back to you tomorrow with another update. Bye bye. Take care.